Good morning. Good morning. That's Friday, the last day of the week, and the 2nd of August. In Bund, we're in a trendish bias right now. Okay, so market participants, they use this volume edge from the beginning pre-market. You see there some you see them some. Excuse me. Sorry here. So you see here the the lower volume edge, and you see this little excess on the downside, and our level at 64 to 67 was tested again then at 820, and now they use this level to get into longs, and you see in this part especially they absorb a lot of material and build value at the top area, because at this moment this was the higher volume edge above the 75, 76, and we're in a trend mode right now, so take care. It's a trendish bias, and in terms of the big picture, we are now at the overnight high. That means also the yesterday high of the day, and not from the cash session but from the overnight session. So that means we are now in a very bullish situation if prices continue with high volume here at the top area. But you see in the volume already here, it's a little bit weakening, and be ready if we test this upper area again and seeing no re-continuation and no re-increasing of buying volume, then there is a chance for the open rejection reverse. That means the short, but not yet, because the only thing we see so far here is increasing buying, and also very trendish bias. So we have to be very carefully. If now prices are able to get higher, then we need some pullback and some holding, and to get them just for a cheap price into the long. And that's very nice. Then we have a free space, we have no resistance then above the overnight high, all-time high again, and Bund can unfold. All right, we're building now new high volume, and we'll see if there's some holding above, and then looking with only increasing of long bullish volume, then we're looking for a entry and not before. Very good to see here in the footprint now that the liquidity is getting in again and again. So this is around the cheap entry price around here in the 91 area. So this area now needs to hold. You see they try to push lower, and you see the extreme now at the 87. So this area now really needs to hold, because if we thinking of this is a long, and people now just using this some shorts for getting into more longs, and if there's really some bigger OTF and ongoing long trend, then this area here needs to hold this edge, this low volume node from the 87 to 89. And if not, then we may have some more volatile market, which doesn't provide this tight stop opportunity to play this. But right now, it's not working. I'm out of this position because this didn't hold, and even though there was a lot of buying interest, the volatility is higher than usual. So that's not they are that's not easy then to trade, yeah, if the volatility is higher than usual. But anyway, just now have a look what happening. Do we get another possibility for an entry, or or not? Because the bullish bias is still in play, but we're now at this edge area here. You see this here around this, where all this volume after the open was bought, and we're around this area around the, at the moment, and the pre-market PUC at the 85. So just waiting now if it can continue, and then we need to see increasing buying volume. If it's just going up again but without the volume, and then we more have to look for a rejection sign, and then really the open rejection reverse, as then this first try of continuation of long trend failed. Only for the moment. You don't know even if it's an hour or two or the afternoon, but right now then it failed. Yeah, unfortunately, I could not participate on this open rejection reverse. As I entered at the 90 level, I was two ticks then and going in my favor, in my direction, but then got stopped out at 86 here, at 86. So at this moment here, then I got stopped out. This holding structure didn't hold anymore, and we see it couldn't be confirmed. It wasn't confirmed then anymore. You see here at this moment where the volume wasn't that huge that was built before. That means they are here in this bullish control area right now, already got completely back to this holding structure. That means where everything started, measured from the pre-market area. So right now we're at this bull controls level, and this open rejection reverse, I could not participate, unfortunately. Yeah, it was volatility a little bit too high, and yeah, didn't expect that after the open, and was set for a normal volatility play, and okay, no opportunity right now here. Okay, right now you see this bull defending level here, where the long started from the pre-market, from this edge, was defended by the bulls. It means you see that selling stopped and some profit was taken. You see then here some absorption in the delta and re-entering with more buyers here and then here. So the bulls came back and now made it to the VWAP and couldn't get above. No more buying here. Interest at 87, 86 and buying was very weak. And so people get out of their position and we're back now at this area again. So that means we can watch if this is going to become a rangy day then, or a rangy morning, and we can look then for a positioning for the range long or the range short, but only if it's not high volume involved at the low with shortish and at the top with bullish bias. So responsive selling here, responsive buying here for re-entering into the range. If not, we may see testing lower prices, or if again buying volume involved and they play it the second time, then there's a chance for the range for the long continuation. Price move is up, moving up to the upper low to the upper range volume edge, and right now this is at the 92 level, as the volume that was built is about irrelevant because it's so tiny here. They need to then stay above and build some volume to call it then a volume edge. But right now, I would say here in between the POC and the IBH, initial balance range high at the 92, there's around about this moment where we're looking for the responsive selling. And in my case, double rejection signs for re-enter then the short in the range. And if no responsive selling, no short. Liquidity in the ask means some kind of resistance. Would nice to see now, after all this long that are taken into the books, it would be nice then not only to see few positions taken out of the books, but we want to see some second rejection to be more comfortable to say that this is really responsive selling, because this is too weak yet. Because look at how many contracts there are taken into, and we need to see some plop, some short sellers and responsive here when they coming here to this top area. At least liquidity takes us here, and at least some buying stops now, and at least some selling is coming into it again. So, but look, if you see the responsive selling signs, and then trying to find a cheap entry price. So did you see what I mean? I said this is not the sign yet to see it as responsive selling, but now we see at the top, that they are rejecting. They reject now. So just now you can work with a tight stop around this area of 95, because if this was a rejection here, if this really was a rejection, then prices cannot go up anymore, because you see now they trying to keep them up. See this here? You're trying to keep them up here, building in liquidity on the bid. That means there are people really, not fake, really interested here in buying, increasing volume at the high of the day. And that means the responsive selling sides that appear at this very moment, not before, I said here at this moment, were crushed, because people then start immediately buying again. So we see the rejection, and think of it, this would have not happened, this liquidity coming in. Because this was then the sign. If you then decided, okay, bam, I go into the short, you see this sign here, immediately buying back. See this stick here, whoop, absorbing back immediately. So that means normally rejection, responsive selling, 1 and 2, and then immediately buyers coming back, and boom, aggressive buying. So with a tight stop, like me, again, I got here stopped out of my position, but I didn't risk anymore because I knew that this is a sign of failure, and people trying at least to play it again. So that means today we see the same thing as every day. They playing for fishing liquidity, and you see they doing it again. What the signs of strong buying, pushing liquidity, at the end, it didn't take further than one tick above. See this? We were at the 95 at this rejection level. Rejection, buying in again, and we only got one tick higher. And always tell you in my place, I'm trying to work with 2 ticks above the extreme is normally, from the liquidity standpoint in Bund, a good stop. So if you enter somehow around the 91, you have your stop at this moment orientation at the 97, you're normally having a good chances to play your play. In this case, we have a higher volatility as normally. So the 2 ticks were okay, but it wasn't no coming in within the 2 ticks of the extreme. That means from 93 to 97, but only at the 90, 91 level. That means today you see we have a higher volatility. You see this also here in the chart. We have a higher volatility, and in this case you have some better rewards. So the target to the distance to the target is increased, but you also have to see that the risk will have to increase also. So that's why I again got stopped out, because I have not respected my own risk parameters. So that means my brain wasn't not able, being adaptive to the higher volatility. And so, yeah, I of course now feeling some pain and some anger in me, but that's okay. I know that the key is finding acceptance for these feelings. Of course, the problem was the days before we had totally low volatility, and now without even from one day to another, we stepped up not 1 but 2 levels from low, not to normal, but to high volatility. And so what you see that it's no fake. This is real, because I did not respect the fact I just described. That I wanna always trying to have a 2 tick stop above the last high. I only got in at the 90, and I did disrespect the fact that a 2 tick higher would meant a 7 tick stop. So my brain wasn't clear at this moment. That means this here was a lousy trade. This wasn't, because look, here was the holding structure from the 88 starting, from this edge starting, and my stop was 2 ticks below. Here I just was stopped out because you see how they then get out of their longs as crazy. In the moment after I got 1-2 ticks above, and then how they get out here in the delta. So this can happen. This was a good lucrative play with a minus, but this trade here, this was a lousy one. That means the things that I can control, I did not. The things that I cannot control here, that's okay for me, because this was lucrative. But here, shame on me, because I didn't control the things that you can control. I mean, there's so many things in the market and trading you cannot control. And you have to live with this and find some acceptance to change this from feeling discomfort to comfortable and focused and totally refreshed and comfortable. But if you then take in trades like this here, is a disrespect of your stop rule, and then got stopped out. It doesn't matter if this would have become a winner or a loser. Okay? So please don't look at this and say, okay, your trade was good because this was a winner. If you would have had your stop higher than you reached the target. This doesn't matter right now because you don't judge your trade by being winner and loser first, not first. First, you just judge them if you take in a lucrative trades with your play manage, with your rule, due to bias and due to big pick. And was just not a good trade. 1, 2, 3, 4, 5 ticks away. No, sorry. 1, 2, 3 ticks away from the extreme at this moment and got stopped out then. Higher volatility means higher stop, and this is not a cheap entry. So no matter, I'm gonna write this into my metrics application, into my analysis. This was just a lousy trade because expensive entry and the stop management was not related to the 2 days a little bit higher volatility. All right. Okay, now as I zoomed in, I even see that it was not only 3, it was 4 ticks away from the extreme. 1, 2, 3, 4. Well, is this really possible? No. 1, 2, 3, 4. Oh, 5 ticks. I was 5 ticks away from the extreme. Normally I try to get it with the 2 to 3 ticks from the extreme. So really, Alma, really lousy trade. Sauber. Okay, now prices are trying to play even this lower level here. That means already here some people getting into the long. So the cash session, now you see that from the open range perspective, we had a open range from 84 to 93, and now you see in the volume already that here at the volume edge we have already a edge here around this 84 level, which means they playing already some longs in here, and that means we already at the moment at least do a little bit tighten up this range. So see the range is already tightened. Means we have no good trading chance now from the risk reward. You see that now they switched to fair price from this range now to this here, and you see in the volume profile that there's the edge at 84 and going up to the 91, and that means this is really tight now. So nothing to do in the moment. I think you will agree. We now have a very high volatility in the Bund. And the trade war, it's still on, and it's right now on every news screen, on every news portal. China and US sanctions, and also today everybody's looking to the speech then of Trump this tonight, as he will then make some statements to the situation with the trade between the European Union and the US. So will be today, starting the speech of Trump at 7:45 p.m. Central European sometime. So this also makes the DAX going below the 12,000 and now going lower. As even we are now in the DAX in the region where the absorption started today morning at 9 o'clock, when they first tried to push below the 11,940 area and then got absorbed, but we are still in the DAX, still on its way down. And of course, in this case, this rise of volatility and this rise of fears and is also having a negative impact then on the Bund. So in this time with the rising volatility, you see that there's this negative correlation between the stock markets and the Bund. When you say, okay, stock's going down and then Bund also is going down. This is not happening when prices are pressured downwards due to higher volatility, due to uncertainty. And if the market is certain about something and you just see that stocks lose and everything is more bearish, then this will transfer money then to the Bund, but not if the whole market is driven by uncertainty. And this is what we see right now, and so that's why we have a correlation, a convergence in Bund and DAX, as both markets are a little bit going lower. This morning open drive in the Bund failed. Yeah, and if Trump, of course, means to do so, yeah, he wants this. Seems like he wants this trade war, and it takes so long now. And the Chinese just said that China does not want to fight a trade war, but is not afraid of one, and use escalation of trade, of course, hurt global economy. Okay, let's see. We spot now the moment where we're at the volume edge now at the lower here. You see this also here where everything started. Again, the market from my high post to 77 where the long started, where we see the accumulation. And now we're back at this level. We see also some first profit taken of the shorts. We want to see now rejection again, but only with a cheap price entry. And now we have support of liquidity at 75. This is very good. That means prices should not go below this, but buyers short term is not on our side. Take a look here. See this, how bearish delta is already in this down move, and it's the first, second, third wave without making a new high. See this, lower highs, lower lows. That means within the range we see ongoing short pressure, and now we see of course now this rejection, and now if it pulls back, but it is now a really it's not so good to play it right now, as you see that there's a liquidity support, but also we have high pressure. There's a lot of shorts in the book still, and there must be really a hard rejection on the downside from the buyers for me to get into this long, because I would be then afraid that prices go lower, as those people who are invested to get into the short here and reacted to the market environment means there's a higher probability than for the short. So we have to see here, remember this, we have to see some really harsh rejection. Like we had here. You see this here? It's a little bit calming down, as a strong pressure, then you see calm, it's okay. Then a second attempt, and then boom. See this here in delta? Boom. Not this here, but this here. See this? So I want to see this if as a trigger then for going into the long. But if this is not coming, what's the sign then? That means these people are staying within the control and then no entry then. So let's see what happens. Liquidity now got tested, huh? Yeah. Okay, I'm still waiting because the rejection haven't appeared yet. You see that here in delta? This is not the rejection from buyers we want to see here after pushing lower. That means they have now a second wave of pushing lower. See this here in delta? And now we have this structure here from the 79 down to the 75. And as long they keep on pushing, that means they really mean it serious. And a sign of giving up selling would be rejection now and people going boom into the market buy on the market buy side, and we would see some big green delta candle here. As long as, and then you have the chance with a small pullback going into at the top level here of the structure. You may see then prices go whoop, upwards, and then some short pullback, and then there's the cheap price area then to enter. But only if this is coming. Right now, we don't see this. Right now, the bulls still in control. The bears are still in control and trying to push lower. So this is an important mark here because this is the 77 that keeps on holding till now. Okay. This was the mark where you remember where the pre-market long started. This was the mark where the range long. The range short stopped before here at 9 o'clock and 10 minutes where we saw the signs of rejection, and now they play it again. So that's like what it is. If you have then more important levels, you want to see also more significant signs. And then only if this significant signs appear, then you can rely on and say, okay, this is my edge now. I see now that it's not more equal weighted, but there's some imbalance. And right now we are just so into the short side, into the short, that one need to see a big signs of buying, responsive buying rejection. And then wait, pulling back and look for the entry. Then you have the momentum on your side and have the possibility of that is then a long trade and with the range back to the level number 182 and then 86. So this would be the targets. But please wait till we see the rejection. Now I would call this a starting. Now the rejection starts. See this? Delta is now people going out of their shorts, got absorbed immediately. We are back into the short, trying to get short. And now it's the moment where prices pulling back and delta is more greenish. So that means now they try to play the rejection. And for me, there was no incoming at the price haven't pulled back yet. Maybe there's some pulling back again, but right now we are at the first selling control level at the 82, 83 area. This is the small edge of volume, low volume area. And let's see if they're coming back to a cheaper price, which would be the 175.80 level. This would be then the pullback, 79, excuse me, to the 80 area. So this would be the pullback area, and then we can go for a long, but only if then the volume is increasing. Still delta shortage. See this? Still shortage. So they still trying to got in here again in some shorts and still trying to force it downwards again. Boom. Yes. Now see this? They got out of the position, the shorts, and now we have a high probability to see the POC at the 86, 87 edge. But unfortunately, I didn't get it here. It's just not my market. Seems like this week wasn't good. First 3 days of very low volatility and now higher volatility, and I just have to accept this. I can't change it right now, and that's the way it is. So you see this? It doesn't even reach the POC at the 86. It stopped already at the 85. One could get out at the 85, and there was contracts traded. But you see how then shortish coming back. So that means at this area here, in a higher time frame, people do play more the shortish side and are not very confident with the longs, as they already take profits very quick. A little bit monkey market now. And it's almost funny to see how the Bund today reacted on the real liquidity in the order book. You see, this wasn't fake liquidity, because you see a 1, 2, 3 time absorption, and then we get into the long. You see the liquidity here. We see 1, 2 times absorption, and then when I said we see starting rejection signs, it was obviously then the real rejection, which I didn't see at this moment because then it was so fast. But you see how the market reacts on this real liquidity, as they don't trying to push it lower. It means there are no so big OTF guys that can trade through. And the funny thing also on the upside, you may not see it here in the screen because it's only it's too, yeah, it's a little bit too weak from the color, but here was also then liquidity appearing at the moment at 9:22, 9 o'clock 22, and the absorption took place at 9:24 and 30 seconds and 9:25:30, where they took it out for a second, but then got rejected. Means passive sellers switched to active selling here and pushed the people out of the longs. That's what happened here, and then we turned into the short. So this was just fishing for liquidity. But you see in Bund, in the liquid market, you have a small advantage when you see this kind of refill in liquidity. That means absorption, refilling, or just absorption, and one or double times. You see that the market then will react. In the liquid markets, this is possible to keep the prices under control and push them back into the value, which is not the case in a weaker market, which is the DAX. Is an illiquid market, only 10-20 contracts per price, and in the Bund you have normally round about 300, and if they fill it up, we may see also 500 to 1,000 contracts. But of course you cannot force people get stopped out so easily as you can do in the DAX, where you then have some overshooting of 6-7 points, which you will never see normally in Bund. In Bund, that's the reason why I always work with a two-tick stop out of the extreme when looking for example, for the range, or with the holding structure here for the relong then. Yeah, that's just some words to the difference between in a liquid and an illiquid market. Okay, price now purchases trying to get higher above the volume edge, 87, trying to find acceptance at the before POC and the before edge that is built at the 90 area. We will see now, see the first people are reacting here, impressive, getting out of their position. We want to wait now here for a double rejection to see, and then we have a very good, very cheap entry area. Measured from the extreme, 2 tick stop, we will see if there is now built a new extreme with a following rejection, and this following rejection would be my entry for the short, and then we measure from the extreme and give it 2 tick for the stop above, but we need to see the second rejection here to enter the short. We're at the volume edge, please remember 90, 91 and 92. This is the area where we have the higher, the 2 days value area high, and yeah, that's it. Okay, now take care. Have a look if you see the rejection. If it's coming, then we go for the short. Measuring stop from the extreme from right now from 90. I pull my stop now tighter to the 90, 92, and if a second impulse phase started, that means new sellers coming in with a lower prices reached, that means prices below the 85, then I will stop. I will pull my stop to my entry level, which is then around the 89, but not at the moment, because still waiting for giving I'm giving the room to unfold. And my first target would be then the 81 if they playing measuring here for the range short. This is my target 1. Yeah. And it's typical right now. You see that the POC is always at some resistance, or when you come in from the upside to the downside going, then it's some support. That means this is the fair price where people trading, whether it's fair, and it's always takes some time to get lower. But if the delta now rises again to the upside, then that's it how it is. This is then just the possible way to get into longs if people already start buying at the POC and can pull delta high and buying pressure higher. This can also happen. This is always what you have to be aware of, or what can always happen if you're trading a range, that if the target's number one, that is the POC, if the POC is very close, then this can happen that you're not getting your targets because they already play the long over there and try to push higher again, or fishing for liquidity again, or want to just go into the long. And if they can trade through the POC then and going downwards to it, lower at the 86, 85 now, and taking out the 85, then we have the higher possibility that we see the other side of the range, or some volume edges if it's a more blurred profile. That's what you see right now here in the footprint. They accumulate already pieces, and of course it's not good for my range trade, but also liquidity is now pulled, and they react with some selling again, but still liquidity here at the 87. We see 700. We saw 500 contracts now. It's now a little bit weaker. Yeah, anyway. Responsive selling again, but remember there are still some longs in the books, and still liquidity is refilled, 400 contracts, so they're using the POC as a springboard level and accumulated pieces. I'm not stopped out yet because my stop is at the 91, and I'm not gonna change it. This is the last possible options I have here. I'm in this trade with a cheap price with the short, and I now just have to see if the market pays me or not. I cannot control at this moment. I controlled everything before as I made a clear mindset trade. I controlled before as I got into a cheap price, and now you have to wait. This is what you have to become a friend, almost a friend in trading. This is the moments where it is okay to feel some pain because you have no control. You have to understand this. And the things you can control in trading, you have to be master. You have to be absolutely master. And that's why trading is also so complicated, because you have to do the one thing very good. The things you can control, like a master trader, like absolutely the master, and you don't get any money for this. This is so crazy thing in trading. You have to do this one thing you can control so perfect, but you don't get even a single penny for it. You only get paid then if you also accept the moments where you cannot control and don't bring additional noise into your trading and make a good trade become a worse, because you can't handle the emotions then, like in this moment when I tell you when we were here. So at the moment we are here, I had this feeling, of course, of uncertainty. I don't know, get I stepped out, do I not get stepped out? But please don't let your emotions manipulate you.
learn to be aware that this emotion's coming, and then the only thing you can do is to say, ah, okay, wow, fascinating, interesting. My brain now trying to force me to maybe quit this trade because it wants to avoid a loser. And that's the thing. If you really got this, if you're really searching for some grail in trading, then it's this. It's this, to understand that even if you do 100% of the things you can control 100% right, and even be 5 times better than I am, you won't get paid. You don't get paid, because you have to know that they're the emotions trying to get you, make you stupid and unclear at this moment. So I'm still in this trade. Now we have impulse phase number 2. We made a low. Now I'm allowed to pull my stop to the entry level at the 89. That means now I can just watch. I don't risk anything anymore. If I get stepped out, it's on scratch. I don't lose money. And I wait now that price hits my target area around here, the 81. This is the next minor POC here, where market pulled up several times, and where's right now the profile edge around here. So I'm just waiting for it, and yeah, that's my risk and my reward. So I want to get my trade to the reward, and that's it then. Now you see they're already fighting this level here, this edge right now at the 84, 83. They can't go lower right now. So yeah, well, my target is haven't been reached till yet, and that's it then. They fight and fight and fight. We see more and more that this edge becomes important. That means in this case, I'm not gonna force it anymore. I will pull my stop to at least the 88 level. That means that I got at least my fees paid, my margin, my fees for the trading, my turn, for my route turn, because as I said, this is just a monkey market today. You don't even get your scalping T1 targets, this is now I'm gonna stop trading here for today because this makes totally no sense. So at least I got my one tick, my fees paid and my round turn, and some small profit in this trade then. But you see this, they tried it 1, 2, 3, 4 times, trying to get lower and lower, and they can't. They can't go below the 83 level, this edge here, and they didn't reach my edge at my target at 81. So now they got back, pulled some liquidity, made, trying the second time, or we will see then they're ranging around the PUC. So that's it. It's just not working today. And I made one lousy trades, one good trade, one became a lucrative trade without positive ticks, one with a 1 tick, and a lousy trade which gives me 1, 2, 3, 4 ticks. And this was the lousy today because I did not stay with my own stop rule. That means as I entered expensive, I then also violated my stop rule. So this is really just an example for a lousy trade, and here was just unlucky as the long stem was pushed out of the book, and here I was, let's say, unlucky. Market didn't pay me, and that's okay. It just didn't pay me because power wasn't enough to get me to this lower edge here. But this was the minimum target. All right, this was about 7-8 tick target. This is the minimum here in this whole day range to get at least the volume area low, but not stopping already at this edge here at the 84, which then appeared. So that's it. Have a nice weekend. Thank you for watching. This is Anton Hopfel for Manapa, and we see you then here next week. Bye bye. Thanks for watching.